joining us this morning. Mr. Roy, great having you. This order win that you've got, give us the context and the perspective and what the roadmap could look like, especially as we close in on the budget, and what the expectations from that could well be with regard to orders flowing through. Give us a sense of all of that.
Thank you very much for having me here. I was just wondering which of the orders you are talking about. You know, there are 3 orders on the trot.
That's correct.
In the last 1 week or so, even though they were very small orders, but nevertheless, they are adding to our kitty. And we have currently crossed 16,400, 16,500 crores of order as I speak to you. They augur very well for the company. If you see, we ended the last financial year at 14,600 crore. Year before that, it was around 10,000 crore. And this year, I hope that we will end up at 20,000 crore plus. Now, what this means for the organization is that we have a long-term visibility and a continuous pipeline of orders to execute, which can be executed. As a thumb rule, the execution is normally 30% of the total order book. So that should give an idea of how the company is shaping up. This year, in the balance period, we expect that we will touch the numbers with the 20% growth that we had projected. And the best part is that we have the orders for it, barring 100 200 crores, which we need from the mining sector, the mining vertical, where we are expecting at least 1,000 crore order inflow in the next 3 to 4 years. So that is definitely going to be very positive for us. As far as, the future projections are concerned, again, since we are in the sunrise sector, that is the mobility, transportation, infra, defense. So all put together, looking at the focus of the government, definitely it augurs very well for the company for the future as well.
Okay. Mr. Roy, hi, morning. This 20,000 odd crore figure that you talk about, even right now, your order book at 16,400 thereabouts is at its highest ever. You've spoken to us about the execution timeline and the thumb rule that you have of following that. But what about the supply chain? Have we seen any improvement over there? Because you flagged off concerns with the supply chain. Any improvement, any turnaround on that front?
Supply chain definitely has been a challenge for us, but for the supply chain, we could have done better in the first half itself. But fortunately, now the supply chain is stabilizing. I would say it has stabilized to an extent of almost 90%. That is why we are able to execute. We will be able to do better in the third quarter. And in the coming 2 to 3 months, the supply chain would have fully stabilized. And that has mainly been because of the challenges while we indigenized. So the supply chain has taken some time to stabilize in terms of the capacity that they could deliver. And more than the capacity, it's the quality that we look for. The quality is cannot be compromised with. And we faced a lot of challenges with the supply chain, rejections in the castings and so on and so forth. But now it is picking up.
Okay. How should one look at the environment currently, sir? Because you sit at a juncture where you've got good order wins coming from defense, you've got good order wins coming even from the metro projects. How does the outlook look over the next 2 to 3 years in terms of execution? You sit on a very strong order book. So give us that sense.
As I said, the execution normally will be around 30% of the order. We expect that 31st March 2027 will end the year at 30,000 crore plus. So again, that gives an idea of how the execution is being aspired for. And it is not only the aspiration, but what we are doing for it. So we are building the capacities, we are building new facilities, workshops. We are skilling, reskilling, upskilling our human resource, human capital. We are infusing human capital wherever the skill set gaps are there. There we are recruiting people, onboarding talent. So various strategies we are following so that the execution can be achieved at the rate that we desired. And of course, the biggest the contributor is the supply chain, a robust supply chain. So what we have done is for every critical aggregate, we intend to have at least 5 supply chain partners. Currently, at one point of time, we had only one. So from one, we have moved on to 3. Now we are in the process of increasing it further to 5. And that is how we intend to grow the supply chain, to grow the MSME sector, and along with that, grow BEML.
Okay. And Mr. Roy, talk to us about, on the back of all of these factors coming at play, do you continue to maintain the revenue and margin trajectory that you forecasted for the end of the year, or any revisions to that?
Well, looking at the current scenario and the current order book, as I already said, since we have almost all the orders to achieve 20% growth in the current financial year, I think we should be in a position to achieve that. And with that, the 150 basis point margin growth also, it should happen.
Can you give us a sense as to this 150 basis point margin shift? Where will it come from? How much of that is going to be operating efficiency? How much of that is going to be product mix shift? Give us a sense of that.
It will be a mix of both, but mostly it will be a product mix shift.
Okay.
It will be led by the product mix shift, and operational efficiency will also contribute to it. But largely, it will be a product mix shift, the shift from mining as a major contributor to defense and rail and metro put together. They will, I expect they will be contributing more than mining. So that will be one of the factors.
And Mr. Roy, your outlook for the mining segment, it contributes the least to your overall revenue pie right now, but what are the growth levers over there?
No, I'm sorry. Mining is not contributing the least. In fact, last year mining contributed 54%, more than what the other two did. But this year, the other two verticals will, contribute more than mining. And mining continues to give our baseline. But only thing is, the outlook for mining is, I would rather take it to, 5% year-on-year growth in the mining vertical. We are trying to address this issue. We have identified the challenges, and the only way we can, ramp up mining is, number one, focus more on exports. Number two, diversify into surface miner, and then to underground miner, that is a continuous miner. So we have already earmarked and our strategy, how to diversify, how to increase the mining growth. Otherwise, if we continue to work like we are currently doing, it will be a flattish 5%.
Mr. Roy, one drag in FY25 was your operating cash flow, and you've suggested that you will likely improve that with working capital optimization. You're expecting to reduce inventory by roughly 15% which could add to that cash flow from operations. Talk to us about how H1 has been for you, and how likely and how quickly can you improve and optimize that?
To be honest, H1, if you look at the results, H1 has more or less been the same as far as the inventory and the overall working capital is concerned. But the H2, once the sales, once the inventory starts turning over, changing into sales, then definitely the inventory will go down. Another component of the inventory is the, what we call it for the metro projects, that is the contract assets. So contract assets is something when we start delivering the train, so the contract asset gets reduced and it converts to sale. So with the first Bangalore metro that we rolled out, which we could have rolled out 2 months back, had our supply chain supported us. Plus this month itself, we are planning to dispatch the second rolling stock. And in the next quarter, we will be dispatching at least 6 to 7 more trains, including one for Mumbai. So the contract assets also should be eased out to a great extent, and it will have an overall very positive impact on the inventory.
Okay, Mr. Roy, with that, we'll let you go. Really appreciate you joining us on the show, taking the time out and addressing our questions, and of course, sharing your growth projections with us. Thanks once again.
Thank you.